Welcome back, everybody, to the Deep Dive. So today we're tackling a subject that I know a lot of you have been asking about,
Mm-hmm.
and that is building a smarter investment strategy.
Okay.
You guys have sent in tons and tons of amazing resources,
Awesome.
and it's really clear that you're all ready to kind of move beyond just sort of picking random stocks
Yeah.
and hoping for the best.
Yeah, absolutely.
Okay.
So you're definitely on the right track thinking that way.
Okay.
Investing is definitely a journey. It's not a gamble.
Right.
And with the material that you've all sent in, we can really kind of map out a solid approach here.
I love that, yeah.
Yeah.
So we have articles on everything from different asset classes like real estate and commodities
Yes.
to, understanding financial metrics, spotting growth potential,
Yeah.
and even navigating the world of cryptocurrency.
It's all in there.
Yeah, really runs the gamut.
And that range is key.
Okay.
One of the most fundamental principles that we'll be exploring today is diversification. Not putting all your eggs in one basket, so to speak.
Okay, diversification.
Yeah.
I hear that term thrown around a lot,
Mm-hmm.
honestly. I could use a deeper dive.
Okay.
What makes it so important?
Imagine this. You have a portfolio of, let's say, $100,000.
Okay.
Now, instead of investing it all in one stock,
Right.
you spread it across different asset classes: stocks, bonds, real estate, even a bit in commodities.
Okay.
This way, even if one area of the market takes a hit,
Yeah.
the others can help soften the blow.
I see.
One of your sources highlighted this beautifully
Right.
by comparing different portfolio outcomes during a market downturn.
Interesting.
Yeah.
So it's kind of like a financial safety net.
Yeah.
Instead of my whole portfolio just crashing,
Right.
if one investment goes south, I've got these other assets to kind of balance things out.
Exactly.
I like that a lot.
And to truly grasp diversification, we need to understand something called asset class correlations.
Okay.
It sounds complex, but it's really the backbone of a resilient portfolio.
All right. Break down correlations for me.
Think of it this way. Positively correlated assets
Okay.
are like best buddies who always do everything together.
Uh-huh.
If stocks are going up, these assets might also be rising in value.
Right.
But the downside is they'll likely fall together too,
Though,
amplifying your risks.
so too much togetherness in my portfolio
I-
isn't necessarily a good thing.
Yeah, exactly.
Got it.
Now, on the flip side, we have negatively correlated assets.
Oh.
They're like that independent friend who marches to the beat of their own drum.
I like that, friend.
Yeah.
Yeah.
When one asset goes down, the other might actually go up.
Huh.
This creates that much-needed balance in your portfolio.
So it's about finding that ideal mix.
Yeah.
Those assets that'll zig when the others zag, keeping my portfolio steadier,
Yeah,
regardless of what the market's doing.
you got it.
I like that.
You've hit the nail on the head.
Awesome.
And it's interesting, one of your sources used the analogy of building a well-balanced meal. You wouldn't just eat one type of food, right?
Definite. No.
Diversification is about ensuring you have a healthy mix of different financial nutrients.
Okay, that makes a lot of sense.
Yeah.
So now that we've got this concept of diversification down,
Mm-hmm.
what are these different, food groups,
Yeah.
these asset classes that we need in our financial diet?
Well, let's start with the one everyone seems to talk about: stocks.
Okay.
Owning a stock is essentially owning a tiny piece of a company.
Right.
The potential for growth is high, but so is the risk.
It's like riding a roller coaster.
Yeah.
You might soar to these exhilarating heights,
Yes.
but you're also prepared for some stomach-churning drops along the way.
A very apt analogy.
Yeah.
One of your articles had a fascinating analysis of Amazon's stock performance.
Okay.
Early investors who recognized its potential and held on despite the ups and downs were richly rewarded.
Wow.
But it also highlighted that even with thorough research, there's always an element of risk.
So researching and understanding the company, its market position,
Right.
and overall economic trends are all crucial
Yeah.
when it comes to stock picking.
Absolutely.
Okay.
That's where informed decision-making comes in,
Got it.
rather than just blindly following the hype.
So you're saying do your research.
Exactly.
Okay.
Yeah.
Now, what about bonds?
Mm-hmm.
They seem a lot less volatile than stocks.
They are generally considered to be more stable.
Okay.
Essentially, you're lending money to a government or company
Right.
in exchange for interest payments over time.
Right.
Think of them as the reliable, steady income-generating part of your portfolio.
The friend who's always got your back.
Yes.
Yeah.
Even when things get a little crazy.
Exactly.
But even with bonds, it's essential to be aware of factors
Okay.
like interest rates and bond rating,
Right.
as these can impact their performance.
Gotcha.
For instance, when interest rates rise, bond prices typically fall, and vice versa.
So there's always a bit of a balancing act, even with seemingly safer options.
Exactly.
Interesting.
Yeah.
What about real estate?
Oh,
I've always found that appealing because it feels more tangible.
yeah, it's a physical asset,
Right.
which can give investors a sense of security. It
Mm-hmm.
can offer rental income and the potential for appreciation as property values rise.
Yeah.
However, we can't forget the importance of location,
Yeah.
the real estate market's health, and potential maintenance costs.
Location, location, location.
Exactly.
And those unexpected plumbing bills can really throw a wrench in your
Oh, yeah,
profit projections.
absolutely.
Right?
Yeah, there's a lot more to consider
Yeah.
than simply buying a property and hoping for the best.
Okay. Last but not least,
Mm-hmm.
we have commodities.
Okay.
I know they involve things like oil and gold,
Yeah.
but I'm a little fuzzy on what it actually means to invest in them.
Commodities are raw materials or agricultural products that can be bought and sold.
Okay.
Think of oil, gold, coffee beans, even wheat.
So it's like investing in the essential ingredients
Mm.
of the global economy.
Precisely.
Interesting.
And they're often viewed as a hedge against inflation because their prices tend to rise
Okay.
when the cost of living goes up.
Interesting.
One of your sources, a report on commodity investing, went into detail about the impact of supply and demand
Okay.
on prices, highlighting how events like droughts
Right.
can significantly affect agricultural commodities.
So understanding global events, political climates, even weather patterns
Yes,
can be crucial when investing in commodities.
absolutely.
It's like a whole different level of market analysis.
It certainly adds another dimension to portfolio diversification.
Wow.
And that brings us to the next piece of the puzzle.
Okay.
Now that we have a grasp on these different asset classes,
Uh-huh.
how do we choose the right specific investments within each category?
That's what I'm eager to learn.
Yeah.
It feels like we've laid the foundation, and now it's time to start building our investment house.
And a strong house needs a strong blueprint.
Right.
Luckily, we have just the tools in your research to do just that.
All right. I am ready.
Great.
Let's do it.
Let's go.
Okay, so we've got our blueprint ready.
Mm-hmm.
Let's talk about how to actually pick investments that have,
Yeah.
a good chance of actually growing.
Right.
It can't just be, throwing darts at a stock board.
Definitely not.
Okay.
Informed decision-making is key here.
Right.
And luckily, your research materials
Yeah.
offer some fantastic insights.
Okay, good.
It all starts with thorough market research.
Okay.
Think of it as creating a map of the financial landscape,
Okay.
helping you navigate potential opportunities and avoid pitfalls.
Okay, I'm all about having a good map,
Yeah,
especially if it leads to financial treasure.
exactly.
Where do we begin with this mapping process?
One of your sources,
Okay.
a book on investment strategies,
Mm-hmm.
emphasized the importance of competitor analysis
Right.
before investing in a company.
Right.
Look at its competitors.
Yeah.
What are their strengths and weaknesses?
Mm-hmm.
How does the company you're considering stack up?
So it's almost like,
Yeah,
similar to starting a business.
right.
You need to kind of understand the competitive landscape before jumping in,
Exactly.
see what works, what doesn't,
Mhm.
and how you can differentiate yourself.
Exactly. And
Yeah.
beyond individual companies, zoom out and look economic forecasts.
Okay.
Are interest rates rising? Is inflation cooling down?
Right.
Understanding the broader economic trends
Yeah.
gives you valuable clues about which sectors
Oh.
are likely to thrive or struggle.
It's about connecting the dots,
Yeah,
seeing how those big picture trends might ripple down and affect specific companies
exactly.
or industries.
Precisely.
Yeah.
Now, once we have a good grasp of the market,
Okay.
it's time to put on our detective hats.
Ooh, I like that.
Yeah, and delve into the financial metrics of potential investments.
Time to analyze the clues.
Yes.
What are the key metrics that we should be focusing on?
One of the most important is return on investment, or ROI.
ROI. Right.
It's a straightforward way to assess how profitable an investment is likely to be.
Okay.
One of your articles used a real estate example.
Okay.
It compared two properties with similar purchase prices,
Mm.
but different rental income potential and projected appreciation.
Right?
Calculating the ROI
Yeah.
helped determine which property offered a better return over time.
So ROI basically helps cut through the noise
Exactly.
and see, the potential profitability of an investment.
Yes.
What other metrics should we have on our radar?
Another crucial one is the price to earnings ratio, or PE ratio.
Okay, P/E ratio, got it.
It tells us how much investors are willing to pay
Okay.
for each dollar of a company's earnings.
So if a company has like a high P/E ratio,
Yeah,
does that mean investors are like really optimistic about its future growth?
it can.
Okay.
A high PE ratio often indicates strong investor confidence. Okay,
In the company's future earnings potential.
got it.
However, it's crucial to consider it in context.
Okay.
Is the high PE ratio justified by the company's fundamentals,
Right.
or is the stock potentially overvalued?
So it's not just about chasing the highest PE ratio.
Exactly.
It's about understanding what's driving it
Yes,
and whether it's sustainable.
precisely.
Okay.
And while we're on the topic of earnings,
Yeah.
another key metric is earnings growth.
Okay.
How quickly are the company's profits increasing?
So strong earnings growth suggests a healthy
Mm-hmm.
and potentially lucrative investment, right?
It can be a positive indicator,
Okay.
but it's vital to remember that past performance isn't a guarantee of future results.
Right, of course.
You need to analyze the factors driving that growth.
Yeah.
Is it due to innovation, expansion into new markets,
Yeah.
or something else entirely?
We need to look beyond the numbers and understand the story behind them.
Exactly.
Are they cutting costs in a way that could hurt them long term?
Are they actually growing their market share?
Yeah.
It's about the bigger picture.
You're thinking like a true investor now.
I'm trying. I'm learning.
And speaking of looking at the bigger picture,
Yeah.
we can't forget about emerging trends and sectors.
Mhm.
These are often where the most exciting opportunities lie.
Okay, I'm intrigued. Tell me more.
Okay.
What are some examples of these emerging trends that we should be keeping an eye on?
One of the most transformative is sustainability.
Hmm.
As the world grapples with climate change,
Right.
there's a massive shift towards renewable energy, electric vehicles, and sustainable practices.
Yeah, I can definitely see the long-term growth potential
Yeah.
in those areas.
Absolutely.
For sure.
And then there's the ever-evolving world of technology.
Of course, yes.
Artificial intelligence, blockchain, biotechnology.
Right.
These fields are constantly pushing boundaries and disrupting industries.
It's like living in a science fiction novel, but
Uh-huh.
like the opportunities are real.
Well-
How do we avoid investing in the next blockbuster
Yeah.
instead of the next Amazon, so to speak?
That's where adaptability comes in.
Okay.
One of the reasons Blockbuster failed
Mhm.
was its inability to adapt to the shift towards streaming services.
Right.
They clung to their outdated business model,
Yeah.
while companies like Netflix embraced the change
Yeah.
and flourished.
So recognizing and adapting to those seismic shifts
Yeah,
in the market can really make or break an investment.
absolutely.
Wow.
And that brings us to an area where adaptability is paramount.
Okay.
The exciting, volatile world of cryptocurrency.
Yes, cryptocurrency.
Yeah.
It's like the Wild West of investing,
Right.
full of potential gold mines,
Mm-hmm.
but also plenty of hidden dangers.
That's a very accurate description.
Oh, yeah.
One of your research articles, a report on the risks
Okay.
associated with cryptocurrency,
Mm-hmm.
went into detail about market manipulation.
Okay.
Specifically, pump and dump schemes. Unscrupulous actors can artificially inflate the price of a cryptocurrency,
Wow.
enticing unsuspecting investors to buy in, then quickly sell off their holdings,
Gotcha.
causing the price to crash and leaving those investors with significant losses.
So it's essential to be wary of those get-rich-quick schemes
Yes.
that promise, astronomical returns.
Right.
It's like a digital gold rush where not everyone strikes it rich.
Right, exactly.
Right.
And beyond market manipulation,
Yeah.
we need to be aware of other inherent risks
Okay.
associated with cryptocurrency,
Like what?
such as its extreme volatility.
Right. It's infamous for its wild price swings.
Yes.
One day you're up, the next day you're down.
Exactly.
It's not for the faint of heart.
Precisely.
That's for sure.
And then there's the regulatory uncertainty.
Right.
Governments around the world are still grappling with how to regulate this emerging asset class.
So the rules of the game are constantly changing,
Yes.
making it even more challenging to navigate.
Exactly. And we can't forget about security concerns.
Right.
Cryptocurrency is a digital asset,
Mm-hmm.
which means it's vulnerable to hacking and theft.
So having robust security measures in place
Yes,
to protect our digital wallets is absolutely essential.
absolutely.
Okay.
Strong passwords, two-factor authentication, and keeping your software up to date
Right.
are crucial steps
Yeah.
in safeguarding your investments.
Okay, so we've got volatility, regulatory uncertainty,
Yeah.
security concerns, all on our cryptocurrency checklist.
Mhm.
What else should we be aware of?
One more thing.
Okay.
The importance of diversification,
Okay.
even within the realm of cryptocurrency.
Gotcha.
Just like with traditional investments,
Hmm.
it's not wise to put all your eggs in one basket.
Right.
Or in this case, one digital coin.
So don't go all in on Bitcoin just because it's the most well-known.
Exactly.
Spread the risk across different cryptocurrencies with varying use cases and potential.
Mm-hmm.
It's about applying those same fundamental principles of investing,
Yes.
even in this new and exciting landscape.
Exactly.
Like that.
Do your research,
Yeah.
understand the risks, diversify your portfolio, and don't get swept up in the hype.
Solid advice.
Thank you.
We've covered a lot of ground today, from the basics of diversification
Yeah.
and asset classes to evaluating specific investments and navigating the world of cryptocurrency.
Yes.
It's like we've been on this whirlwind tour of the investment landscape.
And we've only scratched the surface.
Right.
Investing is a continuous journey of learning and adaptation.
So how do we keep up
Yeah.
with this constantly evolving world of finance? How do we make sure that we're staying ahead of the curve
Right.
and making smart decisions?
That's a fantastic question.
Yeah.
And it's something we'll explore in depth in our final segment.
Okay, I'm excited to hear it.
Stay tuned.
All right, so we're back and ready to kind of wrap up our deep dive into this world of investing.
Yeah.
I've talked about diversification, explored different asset classes,
Mhm.
learned how to evaluate potential investments,
Right.
and even ventured into that exciting but kind of risky realm of cryptocurrency.
We did.
It feels like we've covered so much ground.
We have, but as you alluded to before,
Yeah.
the learning never really stops when it comes to investing.
Right, it's not like we can just set it and forget it.
Yeah, definitely not.
So how do we kind of stay ahead of the curve in a market that's constantly changing?
One of your sources, a guide on long-term investment strategies,
Okay.
made a really fantastic analogy.
Okay.
They compared investing to tending a garden.
Oh,
You don't just plant the seeds and walk away expecting everything to magically flourish.
actually not.
You've got to water them, weed out the things that aren't working,
Right.
make sure they're getting enough sunlight,
Yep.
and adjust your approach as the seasons change.
It's an ongoing process, yeah.
Exactly, and investing is very similar.
Okay.
You need to continuously nurture your portfolio, stay informed about new trends and opportunities,
Yeah.
and be willing to adapt your strategy as needed.
So how do we actually do that? I mean, with so much information out there,
Right.
it can feel overwhelming to know where to even begin.
There are so many great resources available,
Right.
financial news websites,
Yeah.
podcasts like this one,
Of course.
in-depth investment books, and even just connecting with other investors
Yeah.
and sharing knowledge.
It's like building a financial learning ecosystem
Exactly.
around yourself,
Yeah.
surrounding yourself with different perspectives and insights.
Precisely.
But yeah, I like that.
And one of your sources,
Okay.
a collection of interviews with the successful investors,
Hmm.
emphasized that it's not just about passively absorbing information,
Right.
it's about actively applying it.
Okay.
As you learn new things,
Yeah.
think critically about how they fit into your investment strategy.
So it's this constant cycle of learning, reflecting,
Yeah,
adjusting.
exactly.
It sounds like investing is kind of a lifelong journey of growth,
It is.
not just about reaching, a specific financial destination.
You hit the nail on the head. It's that continuous learning and growth
Yeah.
that can make investing so rewarding.
Mhm.
You're always evolving, always adapting,
Mhm.
always striving to make the best decisions for your financial well-being.
I'm feeling inspired, but I have to admit, I still feel a little intimidated by the whole thing.
I understand.
There's so much to learn, and it just feels like the stakes are so high.
Right.
Do you have any advice for those of us who might be feeling a little overwhelmed?
Absolutely. Remember, you don't have to become a financial expert overnight.
Right.
Start small.
Okay.
Focus on building a solid foundation of knowledge.
Mm-hmm.
And don't be afraid to seek guidance from trusted sources like financial advisors or experienced investors.
Yeah.
One of your articles stressed the importance of finding a financial advisor who truly understands your individual goals and risk tolerance.
Right. It's like having a coach in your corner, helping you navigate the complexities of the financial world.
Exactly.
Someone to cheer you on
Yeah.
and help you stay focused on your long-term goals.
Precisely. And one of the most important things to remember
Oh.
is that investing isn't about getting rich quick.
Right.
It's about building long-term wealth and financial security.
It's a marathon, not a sprint.
Well said.
Yeah.
As we wrap up this deep dive, I want to leave you with one final thought.
Okay.
As we've discussed, the financial landscape is constantly evolving.
Mm-hmm.
New technologies are emerging, industries are being disrupted,
Right.
and global trends are shifting the very foundation of how we invest.
So it's more important than ever to kind of stay curious, adaptable, and
Yes.
informed.
Precisely. I'd encourage you to think about this.
Okay.
As you look ahead to the next 5 to 10 years,
Yeah.
what emerging trends or sectors do you believe hold the greatest potential for growth and innovation?
That's a great question to ponder.
Yeah.
It reminds us that investing isn't just about numbers and charts. It's about understanding the world around us and how those changes translate into financial opportunities.
Exactly. So keep exploring,
Yeah.
keep learning, and keep refining your investment strategy.
Okay.
The future finance is full of possibilities.
It is.
And with the knowledge and tools you've gained,
Yeah.
you're well equipped to navigate it successfully.
I like that.
Good.
Well, thank you so much for joining us on this deep dive into investing.
It was my pleasure.
Remember, the best investment you can make is in yourself and your knowledge. Happy investing, everyone.